Let's invite Mayuresh Joshi of Angel Broking into our discussion as well. He'll give us some ideas, and Sudarshan Sukhani has also been sitting with us. Mayuresh, afternoon, we've been talking about a lot of the banks that have been surging, and you have a buy call on three private sector banks. So let's start off first with the biggest one that's moving, ICICI Bank.
Afternoon, Sonia. Clearly, I think generally for the private sector banking lot, it should be a far more better environment over the next few quarters. With the 50 bips cut that has come through, one really expects credit growth to spurt significantly. And again, I think if you talk specifically about the entire lot and the retail contribution, including mortgages and auto loans, I think you might see a huge spurt happening on that front. With the base rate cuts, I think some NIM compression is expected. But again, I think credit growth is something that will take forefront for all these banks. Capital adequacy remains extremely strong. In the case of ICICI Bank, particularly, Sonia, I think the asset quality outlook by the management is extremely robust. You're talking about good numbers coming through on the retail front. Retail is contributing significantly on the advances side. So again, I think a very, very strong capital adequacy for the bank. Capital ratios remain extremely strong. We're expecting earnings growth to be in excess of 18% over the next 2 years, which will reflect in ROAs of 1.7%, ROEs in excess of 18% by FY17. So clearly, I think the branch network that it has got, the distribution network, the non-treasury income, all will abet margin expansion of banks. So I think we've got a buy recommendation on the stock from a 12-month time horizon.
All right. And Mayuresh, you also have a buy rating on Yes Bank. Actually, Sudarshan was even chartically recommending it for a shorter term, perhaps. But what's your price target?
Afternoon, Lata. Again, I think Yes Bank is improving its liability profile, and if you look at how the CASA ratios are panning out for Yes Bank, I think you've seen significant accretion happening on that front. When you talk about asset quality for Yes Bank, very stable asset quality. Again, in absolute terms, a little bit of blip, but again, I think if you look at the overall balance sheet size, I think it is still very, very manageable. Again, the counter-cyclical provisions that Yes Bank has been doing on its balance sheet is going to aid its balance sheet growth. So our expectations are earnings growth in excess of 21% for Yes Bank at a price to book multiple of close to 2 times FY17. I think the bank looks very decently poised for strong earnings recovery. Clearly, I think we're looking at a target of 983 on Yes Bank Lata over the next 12 months.
983, okay, that's a big upside to the current market price. Yes Bank currently at 750. By the way, the market is at the highest point of trade, and the cash market volumes are pretty high today, more than 15,000 crores. So don't be surprised to see a big FII figure. The selling from FIs has receded significantly, so perhaps buying momentum might now pick up. But Nigel's here to give us all the action in the futures and options space. Nigel, are you noticing a lot of long positions getting built up?
You know, Sonia, we should see a big net sell figure in the index options if in fact this rally needs to sustain, because there's so much of action on the put side. You'll be hoping that in fact you do see some writing on the puts itself. So you just take a look at the PCR. The PCR has moved to around that 0.98 from around 0.91. So a lot of action on the put side. The 8,000 put, the 7,900 put, as well as the 8,100 put. They are the strikes that are most active in today's trading session. Close to around 15 lakh shares being added among the three of them. And there is some out of the money call buying as well at around that 8,500 call for around 15 rupees. Run you through 3 stocks that we should focus on. Tata Motors, big short covering being seen in today's trading session. Tata Steel as well is seeing a big short covering rally in trade today. But the reason that the Nifty gets up and going is because of heavyweights. And in that on that front, we are seeing that ICICI Bank really is a big move over there. Some short covering being playing out on that one as well. Back to you all.
Thanks a lot for that. Nigel, well, Force Motors numbers are coming in, and that as well is indicating this surprising combination of domestic sales a little tepid, but exports keeping up. Not bad at all. Of course, we're talking about smaller numbers here, but we saw this trend to some extent even in Bajaj Auto, able to withstand the global contraction pressures, that stock as well. Well, we have to take a break. We've had our experts are still with us, and on the other side of this break, Girish Pai, the head of research at Nirmal Bang Institutional Equities, also joins us with some of his chosen picks.
We are looking at a slower global growth scenario. It's a very uneven scenario, and in fact, India is looking like an island of prosperity where EMs are concerned. So all in all, it's a positive environment for India. We had cash levels and we've been deploying them. We're very glad to see Governor Rajan finally biting the bullet and giving the market something to cheer. I think that was long overdue. So we have been increasing our exposure, and our investors in the US as well are positive on India. It's a very good act by the government to shift the loans from the SEBs to the states, with the idea that they will have better control in terms of allocation and getting repayments, and also to not burden the banks anymore with with further NPLs. So I think it's a good time. I think what I'm saying, therefore, is that it's a broader-based positive for the economy. It's not what you might call big bang reforms, but there's a work-through that's happening, which is setting the stage for a broader-based market rally and a more positive environment than what we've seen in the past 9 months.
CNBC TV 18, celebrating 15 years of leadership.
Welcome back. No let up at all, whether it's Indian markets or whether it's global markets. The European markets are ticking higher, close to 2%, and the Indian markets over 2% at this point in time, with the Bank Nifty up 3%. Well, KK Mistry is making more general statements at the conference. REITs will be a game changer. One would want to know whether he has anything more to speak about that extraordinary offer that he made. Actually, from that conference, we have also got CP Gurnani, the managing director of, manager and CEO of Tech Mahindra. Our correspondent Prerna Barua is in conversation with him. Take it away, Prerna.
Target of about $225 billion, by 2020. That the pace is still on. And what do you have to say in terms of meeting the target? Because we are not revising it at this point in time for the sector.
I think again, both McKinsey and NASSCOM have worked very closely. And NASSCOM, as you know, is a more collection of data from all its member companies. I think 11%, 11.5% growth over the next 5 years, CAGR. I think it should be possible, and there is a very high degree of confidence that 2020 targets would be made, not only met, but you have also heard today that 2025 targets are now $350 billion.
Sure. So they also did say that the rumors of a death of the sector is vastly exaggerated. What do you have to say that over the next 5 years, where do you see the IT industry going forward? And we're also talking about disruptive technology. What kind of an impact will this have on the sector?
So Prerna, again, my point is very simple. The conversations regarding death, I mean, I'm sure you guys know that, when movies were disrupted, when the whole digital streaming happened, everybody said that theaters are dead. I mean, theaters' prices have gone up. You get better quality in all these, multiplexes. But most of us still enjoy a good movie in multiplexes. Same way. And it's not here. I mean, people said the travel industry is going to die because everything will go on to the portals. I mean, everything will become e-commerce. I mean, travel agents are here to stay, and things are... So my quick answer is that, like a travel industry or a movie industry or a retail industry has to constantly innovate, they have shown you that both brick and click can coexist. I think the same way tech services industry or tech engineering industry or a tech R&D industry has to constantly re-innovate, and for us to re-energize, I think that's in our blood. I mean, and that's why we are in the business. Now, which parts of the
All right, that's the word coming in from Tech Mahindra. But moving on, Girish Pai, Head of Research of Nirmal Bang Securities, joins in now to give us his view on some of the mid-cap long-term ideas that he has identified. Girish, hi, good afternoon, and thanks for joining us. You know, one of the stocks that you've picked out for us is Lakshmi Machine Works. We all know this as, one of the third largest manufacturers of textile spinning machinery. But what's the long-term story on that stock?
Yeah, so the growth is not going to be very spectacular. It's about going to be like a high single-digit kind of growth, both on the revenue as well as on the earnings front. The thing is that this company has been around for, they're around for 20 plus years. The cash flows of this company have been extremely strong. It's had positive cash flow from operations as well as free cash flow from most of these 20 plus years that we've seen. So what we are seeing in this company going forward is possibly a turnaround, a reasonably strong turnaround in FY17, where we're projecting revenues growing by late teens to early 20s. After FY16, which will probably see a decline, both from a revenue as well as an earnings standpoint. And that is driven by our view that, the capacity utilization, the domestic spinning industry has kind of reached a certain stage where the companies will have to invest in capex. So we've seen almost like 15, 18 months, we've seen no serious capex come through. So we will see capex come through from that particular side. Plus, this company is focusing on export markets. So it's a high quality company which is going to deliver some fairly decent, steady growth of maybe 9-10%. The more interesting aspect of this is the negative net working capital that this company has. So it's a quality stock, currently going through a little bit of problems in terms of revenue and earnings growth, which will probably pick up in FY17. So that's the basic story that we have on LMW.
Okay.
It's a high quality stock.
Oh, yes, and also a very aged stock. I guess the blue chip of the 80s and the early 90s before the big slowdown came in, perhaps in the mid 90s. What are the price targets you said?
We're looking at 4,700 thereabouts.
Okay, now from a very old company to a fairly young company, Power Mech is next on your list. Why do you like this youngster?
So Power Mech is a company we just listed in August, and it's just about 1,000 crores in market cap. Few things here. One is that the entire the particular segment it is working in, power, is a bit stressed right now. But if you look at the numbers of this particular company, you have ROC of this company still at mid-20 levels, despite the stress that we're seeing in the system. Largely that is driven by better working capital. So if you look at the debtor days of this company, the higher than 6-month working debtor days are just about constitute just about 17% of the debtors, whereas for a player like BHL it constitutes 60%, and for Thermax it constitutes almost like 25%. So that is leading to a situation where the ROCs are fairly strong. If you look back in history, they were close to 30%. This year, FY15, they've delivered about 25%. So going forward, we think the company can deliver about 17% CAGR in revenue and about 30% in earnings growth, leading to a valuation in FY17 of 7 times. So we will not see a company of this quality at this kind of valuation. So we think the drivers of this company, revenue drivers, are going to be operations and maintenance, which forms currently about 20% of the revenues, which has got almost twice the margin of the key revenue stream, which is ETC, which is the erection, testing and commission business, which forms almost like 2/3 of the business. So that is going to be the key driver of margins and earnings for this company, and the valuation is the key trigger.
Okay, so that's about Power Mech. By the way, the Sensex is now advancing to almost a 600-point rally as we speak, and the Nifty is inching towards the 8130 mark. So it's effortlessly, put on quite a bit of weight in the last 10-15 odd minutes. Finally, Girish, you've also identified the Greenply for us. This is a stock that has already given you about 15-20% returns this year. What kind of returns do you expect from here?
So it's still fairly strong. Our analyst expects the stock to go up to 1,400 odd levels. So there's a fair bit of, ground to cover for the stock from where the target price is. So the story there is one of, if you look from a top-down perspective, this is a market of, plywood, which is about plywood / MDF, which is about 16,000 crores in size, of which about only 20% forms the organized sector. So there is a fair bit which is in the unorganized space, and come GST, I think that will change the landscape pretty materially. And within the organized space, it is the leader with almost like 35 to 40% market share. And there few things are happening. One, the driver, revenue driver and margin driver and ROC driver of this company is going to be a thing called MDF. And that is going to drive growth in a very significant way. The second part is within the plywood space, which forms almost 80% of the revenues right now. There is a move towards outsourcing, which is again going to improve the ROC of the company. So the outsourced plywood forms gives you an ROC which is double that of the manufactured plywood ROC. So, we think that this company can deliver about 12% revenue CAGR and should deliver a 15 to 20% kind of earnings growth over the next 2 to 3 years. So that's the kind of view we have on Greenply. So it's a fairly long-term story. It's a leader in that space. It can deliver, in our view, ROC of upwards of 20%. So broadly, that is what we think about Greenply.
Actually, I don't know how perfectly competing they are. Century Ply gave you some 800% returns last year. And Uniply has given some 400% returns I think 12 months. And how would you compare? Is this one that is yet to discover and therefore this one?
No, I think it has been discovered. I think if you look at the stock performance over the longer term, I think it has done fairly well. It's done fairly well. So I think one of the things about Greenply vis-a-vis Century Ply is the fact that it's moved into the MDF space in a very significant way compared to Century Ply. And that it seems the demand is picking up there more than anything else. And there the margins are far better. So the MDF margins can be anywhere between 25 to 30% from an EBITDA standpoint versus the plywood margins of maybe anywhere between 8 and 10%. And the ROCs are better because the capex involved is lower. So broadly, that is the thought process regarding why we're more bullish on Greenply.
All right, Girish, we leave it at that. Thank you for giving us some long-term mid-cap ideas. These are value buys coming in from Girish Pai of Nirmal Bang. But getting back to the markets now, we have a serious move that we're seeing on the upside. Some of these high-value stocks are starting to surge. So look at the intraday chart of Bosch, of MRF and of Eicher Motors. You'll see that the trend is very similar in all three names. All of these have moved to the highest point of trade and are seeing both volume and price action in the last half an hour or so. Mayuresh, between or rather among these three, any buys?
So, Sonia, I think we're extremely optimistic on Eicher Motors. Now, if you look at all their business segments, the two-wheelers have done exceptionally well for them. Timely capex at their Orgatum plant, I think, has helped them reduce the waiting time. And clearly, I think the kind of dealers that they are expected to add 80 to 100 over the next couple of years hold them in good stead. So clearly, I think domestic demand is very strong for Eicher Motors on the two-wheeler side. And again, I think it is looking at the export side of the business, which can be a big kicker with a couple of more products expected to come through in the next year and a half. On the CV side of the business, clearly I think the margins in the quarter gone by were really surprising. I think we are expecting lower margins to come through on the EBITDA front, but they're really surprised us, which clearly shows the trend that the MHCV segment generally is expected to do well, and it is expecting to show a decent volume growth, 18 to 20% in our opinion for the overall industry. So the CV segment, specifically its Pro Series segment, is expected to do well. And even on the MDP part, the improvement there too in terms of revenue contribution will be a big kicker. So consolidated margins should sustain, they should improve going forward. So we remain extremely optimistic, Sonia, on Eicher Motors. Our target stands at 22,800 over the next 12 to 18 months.
Okay. If I'm not mistaken, this JK Infra, actually, the flash that is running on your screen at this point in time is J Kumar Infra, if I'm not mistaken. So it's J Kumar Infra, and that is the stock you should be showing, which has won package 5 of the Metro Phase 3 project. Well, the city wins if the Metro project comes up. That's a separate matter. But we are getting sourced information on who has won phases of the Metro projects. So J Kumar looks like is one of the winners. We'll have to wait and see whether others like L&T and IL&FS Engineering have won any of the other parts of this project. That's J Kumar, stock rising after it's probably having won one of the Metro Phase 3 project. Sudarshan, anything in the mid-cap that catches your eye, and in the PSU banking space in particular, because that entire space is on fire. Look at the likes of a Syndicate Bank, a whole host actually, even Canara Bank and all. Canara is actually a very big bank. But any thoughts on the mid-cap banking space?
Well, I would still stay with the private sector banks and State Bank of India in the PSU Banks group. But beyond that, see, these momentum trades are coming, that's it. But I wouldn't actually be trading, just watching the fun. There are other interesting ideas which are far more tradable. SKS Micro is something I spoke about at 11 a.m. and that is a good idea. The second is where we just heard about MRF, and so I think Sonia was saying MRF is going up today, a high value stock. The same is a bullish story with Apollo Tyres. So today also the tire as a theme looks worthwhile. Traders could be looking to buy Apollo Tyres as we speak.
Okay. PFC, REC, Sudarshan?
Yes, I think we discussed it in the morning also. And both the stocks are, you know, this today's and probably for the next few days, financials, whether they are banks or whether they are NBFCs, all of them should do well.
Okay. Well, we'll come back with more questions too, Mayuresh, on the PFC, REC and the PSU banks. But first, our closing bell money control question of the day is Tata Motors. Its September JLR sales are up 61%. Is the worst over for the stock? Very pertinent today to ask that question. Log on to moneycontrol.com and post your responses there. We will read out some of the more interesting responses after 3:30.
All right, and do remember to catch the McKinsey Global CEO panel on the rise of India's digital quotient with Dominic Barton, the MD of McKinsey & Company, Naushir Kaka, the MD of McKinsey & Company India, and R. Chandrasekhar, the President of NASSCOM, exclusively on CNBC TV 18 all day today.
All right, up next is our Monday special, Midcap Mania with Nigel D'Souza, and the stock on his radar is a company engaged in the business of polypropylene and thermal films and is trading higher by 146% from March 2015's lows. Nigel will give you the details in a minute after this break.
Welcome back. I was telling you about how some of the beaten down names are seeing buying interest. Just look at the intraday chart of JSPL now. It's up almost 16% and big volumes getting traded on that chart. JSPL sitting at the highest point of trade and a sudden surge coming on that particular counter. It's actually one of the biggest gainers that we're seeing in the broader markets right now. There you have it, the intraday chart of JSPL. But it's time for our Monday special Midcap Mania with Nigel D'Souza, and the stock on his radar is a company engaged in the business of polypropylene and thermal films. Nigel, take it away.
That's right, Sonia. In fact, the name of the company is Cosmo Film, and it has been a big mover in the last 1 month or so. So, as you said, yes, the company is engaged in packaging of household products. They also include a range of label, print lamination, industrial, as well as a specialty film. So that's really what the company does. But I'll tell you why I really picked this stock, because from September 8th itself, the stock has moved closer around 38%. If you take a look at it, in one single week or there, it moved around 22-23% approximately. So it's been a big mover. And in this quarter itself, it's moved closer around 60%. So I'll be waiting by for its numbers, because that's going to be quite interesting, given that the stock has seen a big move after the first quarter itself. So in terms of the shareholding pattern, we have promoters holding closer around 43% stake, institutions only 1% stake. But the promoter in the month of August itself, they bought twice from the open market. So they're buying their own shares, always a positive sign. They bought twice, and the total number of shares that they bought has been 1 lakh approximately. So now the promoter stake, as per last disclosed, has gone up by close to around 1%. I was telling you about their first quarter. It looked quite good. So on the top line itself, there was no growth whatsoever. It was down closer around to 8%. But margins and profitability was really expanded big time. So the margins expanded closer around 400 basis points approximately. It came in at around 11.7%. And the profitability as well surged up closer around 370%. That's backed by a better operational performance as well as interest rates falling. To tell you what the EPS was in the first quarter, we should get that graphic graphic played up for you. In fact, the first quarter EPS was only around 9 rupees 50 paise, and you compare that with last full year, that was close to around 14 rupees. So clearly the first quarter has been a good one. What are the key benefits for this particular stock? In fact, they are key beneficiaries given that they are into packaging. They benefit with falling crude prices. The US operations were a bit of a lag. It was giving you a big net loss. I spoke to the management a couple of times and they have indicated maybe by the end of this year they could even come to that break-even mark. The capacity expansions as well have been coming on stream, so watch out on that front. And importantly, debt reduction has been close to around 25% just in the last 2 years. Management is confident of sustaining margins, but yet again, currency goes wrong, you see raw material prices going up, and in fact, they'll be in trouble. Watch out for the stock. Back to you.
All right. At the moment, currency is strengthening, Nigel. So everything going good for Cosmo Films. Thanks a lot for joining us with that. And with that, let's invite Vishal Malkan, who is here to tell us what to buy or sell today for a reverse position trade tomorrow. Vishal, tell us.
Yeah, I would go with two buy calls for today, which is first one would be Tata Chemical, which is broken about the resistance of 390 after a long time consolidation. So it will be a buy with a stop of 393 for targets of 424. And second would be Mindtree, which is already doing good and making higher tops and higher bottoms. So I'll go with a buy on that with a stop of 1500 for targets of 1585.
All right, Vishal, thanks for those ideas. Buy today, sell tomorrow. But let's get an insight into the dealing room chatter now. Nimesh is here with Trader Talk. Nimesh.
Hi, Sonia. It's a good day, simply because after 3 days of a layoff, if you're having such a strong day for the markets, it's generally a good day for traders as well. So, the difference in today's move is that it looks like, and the feedback is that today's move is backed by some institutional buying as well. So, watch out for the FI figure very closely. Maybe we'll see a decent FI buy figure in trade today. And that actually means that whether we are seeing a reversal of the FI flows itself across Asia and across Indian markets as well. Even for the Asian markets, I was just looking at the global data, and even that suggests that at least the outflows have reduced considerably in the month of September. So if you look at September month, cumulatively the outflows was close to $5 billion compared to $12 billion in the previous month. So even that is halved if you look at the Asian region. For India specifically, the sense I'm getting is there is some bit of passive money actively buying into Indian stocks. And today the difference is the old economy stocks are back in the limelight. So the infra names are doing good, the capital goods are doing good. So it looks like some passive money is buying into the old economy stocks in trade today. The sense I'm getting is maybe this pullback will go on to 8200, 8250, but the big change in the India-centric is that the flows have turned for the good. The worst seems to be behind us in terms of the outflows from the emerging markets as far as India as well, and that is the reason why today's move is very strong, simply because this is backed by FI buying. So watch out for FI data very closely, and it looks like this momentum is likely to continue, and the next level to watch would be 8250 on the Nifty.
Okay, that's a tall number. Thank you very much, Nimesh, for joining us. And let's invite our experts back again. Anand Tandon has also joined us, and of course, Mayuresh and Sudarshan are with us. Well, actually, the stock that's surging at this point in time is Motherson Sumi. Pick up Motherson Sumi, and in the last 1 hour or so, I think it's absolutely moving up like a rocket. There it is, highest point of the day, and now up about 6%. This stock. Mayuresh, time to buy the distress?
No, again, I think we'll still wait for numbers to come through. So clearly, I think on the S&P, SMR front, you are seeing some margin compression happening. Structurally, I think the order book remains very, very robust for Motherson Sumi. The utilization levels have remained extremely strong. The Volkswagen issue, possibly, and the repercussions thereof is something that I'll keenly like to understand post numbers from the management. So clearly, I think wait and watch at this point, at least for Motherson Sumi.
Anand, welcome to the show. Good afternoon to you. Would you buy any of the auto ancillaries, Motherson included?
Well, Motherson in particular, because of the events around Volkswagen, I would think is perhaps not top on the list. I have to admit that I already have a position in it. But I am not sure that this result will also reflect anything that is going to happen in the future. And we still don't know the impact of the revelations in the US in other markets. So I would hold on to Motherson. I think a better and perhaps a cleaner bet would be Bharat Forge, where it does seem to have bottomed out for now. But even that is not particularly cheap either. There are a whole lot of smaller auto ancillaries which are not export oriented, which for now seem to be more attractive. But you have to remember that anything which is not exporting is A, not going to be able to scale very large into something which is very large, and B, the margin will actually again begin to fall as soon as the OEMs begin to see some profits being made there. So it may not be a sustained rally, But for the near term, I think that's where the focus has to be if you're looking at organs.
Okay, but what about the market as a whole, Anand? What's the sense you're getting after the move we've seen today? Is it just a global-led rally that we're noticing, or are things improving locally as well?
Well, actually, I have to admit that I was surprised with the kind of rally that we have seen today. It was, the beginning of the day, one could expect could have been led by the fact that, Friday was a good day for international markets and we were shut. But the momentum that has continued through the day has been somewhat surprising. And I think, perhaps it's a mix of short covering and the return of investors. I do not see anything that has changed dramatically in the macro other than the fact that interest rates have actually fallen post the policy action of the RBI. But I think the rest of the macro numbers are not looking anything brighter. I mean, if at all, the government expenditure for the last month that has come out has been rather weak. In fact, almost no increase has happened in the capex and so on. And I don't expect that the results will have any great positive surprise. So the strength of the rally is indeed surprising, and I think the best one can do is just follow the trend.
So you want to step out and buy when the market offers you more attractive opportunities, even as an investor, Anand?
Well, as an investor, the answer is yes. I think the market again has reached 18.5 on my estimate of where it will be in the end of the year. And I don't see that the re-rating can be sustained. As a trader, however, near term, I think the momentum is very solidly upwards. So you may get another couple of 100 points on the Nifty before you begin to take a call. So would I be in a hurry to sell? Perhaps not today. But fresh money commitments at this stage, unless you're looking at very specific companies where maybe some of the government action may drive growth or restructuring more likely, I would not necessarily go out and put.
Well, actually, thanks, Anand. I wanted to ask Sudarshan exactly about this bump up that we are seeing. Sudarshan, steel stocks. JSPL actually is charged up in the last bit. Actually, it's been having a good day. So is Tata Steel. Any of these for a shorter term play? As well, for that matter, Motherson Sumi. You said in the morning that you won't buy the distress just yet, but that I would assume was the longer call. Is there a shorter call for a day, buy today, sell tomorrow types?
No, there are no such short calls. In a sense, there must be a trend for us to take the risk of buying today, selling tomorrow, buying intraday. The stock must have something to offer before we actually put our money at stake. And one day's move in Motherson Sumi is not enough. Steel is completely out of question. These moves we know these moves have come now. There was no suggestion that the steel sector would go up in the morning. So these are all, after the event trades. There's no need. There's one stock that in the morning somebody else was suggesting, and I think that was a good suggestion, is Bharat Forge. Bharat Forge has a small base from which it is now coming out. So at least there is a pattern there that tells us that yes, the declines have stopped. They have now found support and a breakout is happening. That's the stock that we should be looking at.
All right. In fact, that stock is up almost about 3% today. But Mayuresh, one big theme that played out today is, the government looking to recast the debt of discoms. And we did see a lot of these stocks like PFC, REC go up significantly. From a long-term investor's point of view, anything from that space that attracts you?
So clearly, Sonia, I think any improvements on the discom side and the financial health thereof, I think will be a big booster for companies like PFC, REC, who got major investments done on the transmission side of things. So clearly, I think if you look at the numbers of PFC, REC for the last 2 quarters, and specifically the last quarter, you'd seen some slippages happening in that on the private side, where the private contribution for a PFC, REC respectively stands close to 17.5%. In terms of gross assets, I think 1.25, 0.85 is where the ratio stands. So I think there have been some slippages on that front where 3.7% provisioning needs to be done. When you're talking about financial health improving, definitely I think the cash flows for these companies improve. And do the valuations look attractive? Yes, I think 0.8, 0.7 times respectively for both of them. But do the cash flows improve structurally significantly from the current levels? One really needs to wait and watch and understand how the reform processes are getting on, how the recovery processes are happening, whether there are going to be any tariff increases, which I see a very limited scope of that happening at this juncture. future. So clearly, I think valuations looking attractive, but cash flows probably not sustainable. So I think I'll be preferring something like a Power Grid, which at least has a sustained ROE model of 15.5%. The capital outlay of more than 1 lakh crores is going to abet the return ratios going forward. And again, I think the top line and EBITDA growth of 17% is on expected lines. That is expected to come through the next couple of years. So on a 1.4 times price to book looks extremely compelling at this stage. So I think Power Grid is something that I'll prefer at this point of time.
Yeah, of course, Power Grid actually has been behaving more like a fixed deposit or a debt instrument rather than an equity instrument. Anand, would you buy into this PSU bank reform story? You know, there is the IDBI story, which is a little more kind of revealed that the government will become an indirect shareholder, more on the lines of Axis Bank. But they could be trying something like that even for the other banks, as well cleaning up of the discoms. Any reason to buy PSU banks?
You know, I have a slightly different take on the discoms and, for example, what is likely to happen in sugar or even some of the other areas where there are large subsidies which have or large arrears which have kind of spoiled the structure of the industry. Rather than looking at the banks, why not look at the actual industry itself? So, for example, if you really expect that there will be a change in the economics of the discoms, wouldn't it be perhaps better to look at the utilities which don't have buyers today and may likely get buyers tomorrow? And you know, the economic impact on those is much likely to be more dramatic. Also, many of the utilities, for example, are trading at probably half-time book. If they were to actually start producing power and selling them, you would probably find that they can at least double from here at the very least. I think the PSUs have a lot more problems in terms of not just performance, but management, the way that they're going to lend going forward and so on. So I think there are more attractive opportunities rather than just the banks.
Point taken. Well, I'll just come back to you in a minute because the markets are closing in about 8 seconds and looks like they're going to close at the highest point of the day. The Nifty closing at a gain of 2.2%, 8,125. Even on an averaging, it should be around that point because it's been straying at that level for almost the past 15 minutes or so. It's been a very good day across the board, and the day ends with 4 stocks in the green for 1 in the red. In fact, a little more than 4. So that's what 80% of the market higher than where we left it on Thursday evening. In terms of the bigger boys, actually it's the steel stocks that have done very well, but it's not just the 6% uptick on Tata Steel. Tata Motors comes with a 6% uptick, which was from the word go. ICICI Bank has had a roaring day, 5.3% higher. One of the beneficiaries of the Ratnagiri recast, as well as to some extent the power discoms as well. Bosch, we've been speaking about that. Sonia alluded to it, 5% higher. HDFC raised money so cheaply, whether you're looking at it equity-wise or debt-wise. That stock is up 5%. Hindalco is up 4%. L&T 4.2%. Hero Moto 3%. Axis 3.5%. ONGC 3.5%. Even ONGC is 3.5% higher. NTPC 3%. Bank of Baroda 3%. I mean, the list goes on. Yes Bank, Bajaj Auto, a whole host of them. That's the story of the big caps. Sonia, the mid caps have an equally good story to tell.
Oh yes, it was a very good day for the mid caps as well, more than 2% higher for the index itself. There were a couple of themes that played out. One was this, all these power related stories. So PFC, REC were all up in trade. From the metal space, some of the beaten down names like GSPL saw a big boost today. And then you had the infrastructure plays. So IRB Infra, IVRCL, HCC, all of them rallied anywhere between 4 to about 10%. Then you had some auto ancillaries that did well. So Bosch from the frontliners, MRF, Eicher Motors and Apollo Tyres from the broader markets also had a very strong session. But we end the day at the highest point. It was a spectacular session of trade, given that last week was very ho-hum for the market, about a 1% rise. This week we started off with a bang and conquered that 8100 mark. But Mayuresh, Lata was referring to Tata Motors being one of the big gainers today. That's come after a long wait and a long crack in the stock. Do you think the worst is over, or is there some more to go?
Clearly, Sonia, I think if you look at what China accounts for Tata Motors, 20% of the overall volumes, and if one really assumes for JLR, the consolidated margins to stay well below that 15.5% mark, which is again way below what they've been posting so far, and you really assume the Chinese growth in terms of volumes to stay in the higher single digits, the price erosion that we probably witnessed in Tata Motors when it corrected to those 280, 285 levels, I think has had built in a lot more in terms of how the numbers might pan through. Again, I think the numbers that we probably saw ex-China were extremely encouraging. And again, I think our theme suggests that the modular platform that Tata Motors is doing, the Chery JV operations in China, will have results in terms of margin expansion going forward. The new launches will have the benefits of greater volume sales going forward. So I think Chinese volumes, if one really assumes even growing at say a single digit kind of scenario in the higher teens, we're really expecting Tata Motors not to underperform majorly from the current levels. So I think the levels of 280-85 that we've seen is probably the worst for the stock. So if it corrects again because of any conditions in the market, I think it becomes a good time for investors to buy into the stock.
Okay, well, actually, I want to get back to Anand. You were completing the point, Anand, that rather than buy the PFC, you would buy the power companies, because if the Discom's debt got cleared out, they could buy more power. Which would you buy then?
Well, actually, all the small ones which have not yet got PPAs, because they are looking at trying to find PPA buyers, and the issue has been that the SEBs don't have money to sign up any more power purchases. So, many of the private sector companies which have set up the capacities and are still looking for buyers would be the logical bet. Obviously, a company like NTPC and so on would be less benefited because they already have a very large portfolio and is not likely to move. Though even that, on a valuation basis, doesn't look particularly steep.
All right, gentlemen, thanks for joining us in this last 1 hour of what has been a really strong day of trade, but it has been purely global, the move today. So we've seen globally risk-on trade is back, and the European markets, by the time we closed, are up more than about 2% or so. In fact, some of those markets like France now up more than 3%, so you can clearly see which way the wind is blowing. But one of the big stocks that moved on the downside today was Maruti.